Welcome in. It's Michael Murray with Benzinga here at the Future of Digital Assets Conference in New York City, joined by Mitch from SteelWave. Mitch, you and the team came in a little bit ago in New York, your first Benzinga conference. It's great to have you guys with us.
Thank you for having us. No, we're really excited to be here.
Pleasure to have you guys here. So for anybody that's not familiar, kick us off by talking about SteelWave and what you guys do specifically.
Yeah, so SteelWave, we're a private real estate development and managing group on the West Coast. We don't make boring real estate. We really do the campus, mixed use, the stuff people want to go work in. And we've been doing it for a while. My father was the founder of it. They've been in the space for about 40 years. We have boots on the ground pretty much all up and down the West Coast, spanning out to Austin, Boulder, all that Denver area. So
awesome.
It's a very interesting time to be in the real estate space.
100%. Yeah, that's
definitely.
putting it mildly.
Yeah.
So for you guys, we were actually able to talk with Jamie Finn and the Securitized team this morning too. So along the same lines, we talked with this about Jamie, but when it comes to building or tokenizing an actual physical asset with real tangible value, what's the difference there from a digital currency or a digital coin with nothing actually backing it?
Well, that's really what brought me into the space. I ran a hedge fund. We traded volatility. I graduated out of college, and then I saw, we had a front row seat to really a lot of the assets that weren't backed by, ideas or teams or all that stuff. And I was like, look, if we can bridge in institutional grade real estate, it'll really push the hand in the space. So that we started thinking about it in like 2019, early 2020, and we were talking about it at a couple conferences, and people were joking with us, like, why would we want a stable return? Why would we want controlled risk rate? And then when the crypto winter hit, all of a sudden it was like, all right, now that 8% sounds really good, especially the fact that it's collateralized by the hard assets themselves. So
got it.
That's really the difference in it. And you can underwrite it, right? You can understand, like, this is going to be consistent cash flow. We're seeing 9 caps come to the market now. And it allows for institutional grade scale to come into the space, the way we look at it.
That's terrific. So when it comes to the future of SteelWave, then, what are you guys planning on over the next year or two, ideally with specifically for real estate, which I think is the most interesting angle to take here, because there's plenty of people tokenizing assets, but when it comes to tokenizing real estate and where the real estate market sits now, what's going to affect your business in good ways and bad ways when it comes to the current market, especially on the commercial side?
So for us, the whole tokenization realm, it's not quite deep enough yet, right? Our deal size, our smallest deal is $100 million, and it spans up to a couple billion a piece, right? So you're not going to go raise that from a bunch of retail investors. The only way to do it is to really raise it from institutional players. Yeah. So we step back and we're like, look, let's go raise capital out of the Middle East, Europe, Asia, that wants U.S. real estate exposure. We're going to domicile the fund in Bermuda and offer them the chance to bring their positions to market when they want, right? Yeah. Basically along the lines of, there's a huge real estate opportunity here. We're seeing return rates with controlled risk that we haven't seen in 30, 40 years.
Yeah.
So we're like, look, let's go deploy, let's get the real estate together. Once we control it, we can bring it to secondary market. But I really think that's the only way you're going to start to see scalable institutional level assets start to pour into the space.
Got it. And for people that want to invest in SteelWave, institutional, is it accredited investors? Is it smaller? What's the
so as it sits right now, it's all institutional. Bigger check sizes. What we want to in the future is to offer positions to retail investors, and that's really where we see the tokenization come into play. I don't think it's there now, but I do think it will be there over the next 12 to 18 months. And you even see it here at the conference. Everyone's talking about they want assets that are collateralized by something. They want a hard asset, a consistent cash flow. So I think it's only the start of this race, and we're getting going pretty fast here.
Absolutely.
So we're excited.
And a final look from you two at the economy overall, right? Because when it comes to tokenization, when it comes to digital assets, tangible assets, the economy and the larger scene is going to affect all of those, right? Definitely. So when you look at the economy in 2024, the interest rates and the macro look there is going to play a huge hand in all of these different industries. What's your take on the economy moving forward next year?
So look, I think U.S. markets are, if not frozen, extremely slow right now. You're not seeing debt. We're not getting debt on deals. So we're like, look, let's go raise international. There's a bunch of international capital that wants exposure. We see them as kind of this future financing vehicle. And we're going in with all cash, right? We're buying an unlevered 9 cap going in, mid-teens return to the investors with no debt on it, right? We'll put debt on it when rates come back rational. But for the next 18 to 24 months, I think money's more expensive. There's a fractional, complete dislocation in the market, and you're seeing buy points that you haven't seen since the RTC days.
Yeah.
And San Francisco, for example, what was $900 a square foot, you're probably picking up for $200 a square foot now.
Yeah.
And yeah, it needs work. You need to make it amenitized, but at that cheap price, you can do that, and you can make it cool. You can put a Hudson Yards, a Chelsea Market in San Francisco, and really kind of revamp the whole market. So we're trying to be on the front edge of that. We're trying to build the portfolio and develop it over the next couple of years.
Absolutely. Well, Mitch, it's our pleasure to host you guys at your first Benzinga conference. We look forward to seeing you guys next year. Thanks again to you and SteelWave.
Thank you so much for having us. It's been amazing. Really appreciate it.